Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, January 28th, 2016. I'm actually getting this out about 10 minutes before the bell closes. I'm not, today's action, even if they had higher, doesn't really change really what I'm thinking right now. If we look at the money flow here, you can see that there are selling. The big boys are selling the spiders right now, even though they're up. So, you know, it doesn't really hold too well. I know oil was up today. For some reason, the market participants are really linking whatever oil does to the markets, and eventually that's going to decouple. Because if it was going to continue to do that, then heck, we would see the S&P at 600 right now. So they're trying to make a story up for getting everybody to believe that no matter what oil does, the markets are going to follow, and it hasn't. If you take a step back and look, oil has been at lows that we haven't seen in close to 15 years. And the S&P is 200 points from the high. So it's, they're trying to make everybody believe this. I really wouldn't believe it all that much. So we see selling going on with the S&P as far as the big boys. Doesn't mean that it has to turn right now, but something you just want to pay attention to. So taking a look at the 60-minute chart here, if they had higher, fine. We're probably it's gonna hit its head in one of these resistance areas. And I'll add my second short on it. If they head down, I'm going to be cautious. We may just come down, someplace into these areas here. We may test the lows. We may break them. I'm going to leave that to the market as far as what it is going to do. But right now, this looks like it's just we're building a little bit of a bear flag right now before the next move down. And like I said, it may just come down and test it. I'm not an ultra bear right now. I'm just expecting that we could see some lower levels before we see higher, and when if it gets down to these levels, I'm going to switch hats again and most likely move over to the bull side, because there's a lot of damage that was done here as far as from burning off the daily overbought levels. If we do come down and make a new low, we're going to get bullish divergences on the daily. So, like I said, I'm not an ultra bull but bear right now. I'm on the side that I believe that we're going to have lower before higher, and that's why I'm on the short side right now. But even if we come down and say test it or break it, it's probably going to be a real good buying opportunity, because we haven't seen bullish divergences in this market in a real long time on a daily time frame. So we have the bearish divergences. We know things are pretty overbought right now, and we've only retraced 38%. So that would give us the clue that they're going to be coming down and either testing these lows or taking them out, and then that's where we're probably going to get some bullish divergences. If they head higher, then we just want to keep an eye on that 1926 level. So on a 15-minute chart, we didn't really have any bullish divergences in place because we never made a new low. Kind of looks like it's a triangle right here. If the bulls can hold above this, get above this 1900 level, then we'll probably see a push up to the someplace up into this the previous highs, or even the real resistance is going to be the 1909 and then the 1917. But again, it's really just going to we're neutral right now on the SMI. We don't have bullish or bearish divergences, and it looks like it's just kind of moving off the lows, so a move down would make sense. And what we want to keep an eye on is the 1864 and then the 1852. If the bulls hold that, we pay attention. If they go through it, then we eye down this 1834. So for the bears, they need to push it through the 1864 to get it to the 1852. If they can get it through that, then we start looking at the 1834. And if it starts, if it gets bear ugly, then we start eyeing down lows or previous lows. And that's really the way we want to look at it. What the bears want to defend, or what the bulls want to get over, is this 1901. That will leave a door open for a move to the 1908, 1909 level, and then in 1970. And if the bulls pick up momentum, then we start looking at this gap to get closed at 1920 and possibly 1934. But really, the way that this is moving right now, I don't think it's coming up here. I actually think it's going to come down first. But I can be wrong. It's not, wouldn't be the first time, wouldn't be the last. And if I was really, really bearish on this market, then I would be probably a little more upset. But like I said, I'm kind of have a neutral to bearish hat on. I'm not ultra bearish just because I know that the move down here really shook out a lot of people, and we could just come down to maybe suck in some more shorts, or we may get bear ugly and start coming down and testing these lows. But once this low is made, I do believe that we take out these highs after that's all said and done. So 5-minute chart, you can see we do have some bearish divergences, so lower would make sense. Again, with the bulls, they really want to start pushing it through this 1878, 1872 to get momentum going, and if they do head higher, 1907 is resistance. So with that, like I said, keep a neutral to bearish hat on. Don't get ultra bearish on this market. A lot of damage was already done, so it's almost like you're, trying to keep that ball underneath the water, and it's moving around. Yes, you could get it deeper, but the thing is that when you lose control of it and it pops out, it's going to shoot up, pretty high, and that's kind of where we are right now. Where yes, we could go lower. Just don't be married to that side. So with that, have a great night, and I'll talk to you guys tomorrow.